Bigger picture dollar Canada, again, there's not too much going on after all that talk about it, right? We've come off a previous level of structure support. You can see our green VS1 level down there. We came to a nice little rejection zone up here. I'm sure this is the level that Cody was looking at for shorts. And again, there's no type of, I don't see any type of long-term play, like bigger picture on the daily. I don't see any reason to be like, hey, we're going to bounce up and go higher, or we're going to bounce down and go lower, right? If we violate the level of support, that's a different story. Then there's a fair amount of room to the downside, probably 129 evens, 131s if you want to be kind of conservative. But not much here, bigger picture. But smaller picture, and this is kind of the mercenary style of trading that you can look at, can you capture small moves within areas of nothingness as a trader? And the answer is yes, of course you can, right? So nice pattern formation there. Nice trade by Cody as well. Still meat on the bone, guys. Still meat on the bone. Cody's looking for 133 evens. That's right down here, right? Our little structure shelf as we get into this level, right? Currently, we are putting in a retracement. We're putting in a retracement to a pretty decent level, right? If we kind of look at what price action has done, even recently, even yesterday, right, where we spiked down after we had Bank of Canada. I forgot what the news was yesterday. Anybody remember? Was it GDP? Yes, it wasn't GDP yesterday. Anybody remember what Bank of Canada news came out yesterday? But anyway, someone important spoke for them as well yesterday. This is the spike from that and the Powell speech, right? We're coming right back up to that level, right? You can see we put in a little floor down here. We retraced off that floor. We came down. We met that floor again. Failed retracement back up. Little stall and rejection right here before breaking down. We're coming right back to that level, right? So if you're looking for continued shorts here, right? If you're eyeing up 133s like Cody, look for a pullback trade and another short opportunity here, right? We can go down to the 15-minute chart. And now I'll end up loading up a range bar chart as well. 15-minute chart. Let's go to a range bar chart. This is an 8 range. Should be about the equivalent. There we go. Thank you. Yeah, I knew they were both speaking around the same time. I just forgot who and what. There's too much going on in the market, right? So here's dollar Canada on the range bar chart. So you may get a little bit of a different view here, right? Here's our VS1 level. Here's our kind of a smoother look at the pullback area we're looking for, right? We may get an interesting CTS trade if looking for shorts here. Let's see what an AB equals CD pattern looks like. AB equals CD move would put you right here at 133, basically 134 evens. I got a feeling that's the level we're going to want to eye up. 134 evens. What else can I add, guys? Do the work for me. What else can I add? There's a few things. Repetition. Make sure you guys get this repetition. Fibonacci extension. Yep. Always can team that with an AB equals CD. Those things can go together. We're going to have a 1618 at 134.02. So right above that level, still in this structure zone. So again, I start off by drawing a zone around structure. Then we're trying to pinpoint an area within that zone. Fibonacci retracement, yeah. We can do two of them, actually. We have a small one from this most recent swing high to swing low, right there. You can see there's an 886 there, but that's not really going to mean too much for me, just for advanced pattern formations. Let's see if we get, a 382 from this one. Swing high to swing low, 382. 382 right at that level. We could even do a Fibonacci inversion, right? This is the tricky Fibonacci inversion trade, right? Because although we can see this as a straight swing, right? We can see this move as a straight swing. But you see how we also have this little retracement in? This was that Fibonacci inversion setup that I always tell you guys about that is very tricky because it basically deals with an invalid trend that is not an invalid trend, but looks like an invalid trend, and you're hoping that people think it's an invalid trend, so that smart money trades it like it's not an invalid trend. Anyway, you take a Fibonacci extension from that backwards, and you're looking for a 1618 to line up with your level. So you can see we have a 1618 Fibonacci retracement right at that AB equals CD pattern, right at that 134 even handle, right at that level of structure, right? Decent trading opportunity in my opinion right here. I'll thicken this up some so you guys can see it. Decent trading opportunity for shorts in right here. If I reverse back to my day trading days, here's how I would handle this, right? Looking for shorts in this area. Again, I'm not aggressive to put just a limit order there, so I still need a reason for entry. Targets, stops, excuse me, where do you think stops will go? Now, on the other hand, you can also look at this as a head and shoulders pattern. That's the tricky part between trend continuation and counter trend traders. We can look at the same thing and see two different things. But stops, any ideas for stops, guys? I can get them ATR above the high here. That's going to put me at 134.15s. And then for me, targets would be at the lows. Let's just do this, put another one down there. For me, targets would be at a retest of lows, at least initial targets. And again, you guys know I'm much more of a counter trend trader than a continuation trader, so my bias is that structure is going to hold. But we're looking at a trading opportunity like this. Now, the reason I'm not looking for a full continuation, at least with initial targets, is because we do have this VS1 level right here. We're looking for a sign of reversal here on the range bar chart. Right at this structure level, you can see we came up. We got a little bit of a pregnant pause here. Never got any reversal sign. Never got any lower low, lower close or anything like that. Never got any double top. Price has now broken and closed above, I believe, this previous level of structure. So what that does is that cancels the trade. And again, I say this all the time. This is the biggest difference in what I see with kind of professional or professional-like traders versus gamblers. And I spoke to someone the other day who was talking about price action trading. He was talking about how, he doesn't feel the need to use indicators or anything like that. And I said, yeah, I don't think you need to use indicators either. You can be a pure price action structured trader. There's nothing wrong with that. I think he had a few friends that were saying like, you can't trade without indicators, this and that. And then we got into talking. He was telling me about how he just kind of looks at the markets and he makes these calls, and that price had rolled over and he made a lot of money. And I was trying to explain to him that there's a difference in real trading. It's more than just making a prediction. And I always say we want to be predictive in our analysis, reactive in our execution, which means that we want to predict key levels. We want to predict direction, obviously, but we then want to wait for the market to give us clues that our prediction is more likely to happen than not. So what I see a lot of newer traders do is you'll do analysis like we did. We'll draw on all the Fibonacci stuff and the CTS stuff, AB equals CD stuff, and they'll make this prediction that, hey, price could hold right here and see a continuation down. And then what do you think they'll do after that? What do you think the next step is immediately after they make that prediction? That this is a key level for them to focus on. What do you think they do when price gets to that level? Well, they enter. They enter right away. Never waiting for any sign that proves that their prediction, or gives them clues, I said, that their prediction is more likely to happen than not. The key is predicting these levels, not jumping the gun unless you've chosen to be a super aggressive trader. And if you did, there's nothing wrong with that. But not jumping the gun, but waiting when price gets to that level, seeing if it gives you a clue. And if it does, you execute the trade, you pull the trigger. If it doesn't, you stay out. And this is a perfect example of that because price came up. We had a level. We liked the level. We had a zone. We liked the zone. We thought we may get an entry signal to the downside with a lower low, lower close. Price never gave us that. And now it's blowing through the level. Is there any loss on this trade? Maybe a loss of confidence, maybe. That's about it. Man, it didn't work out in my favor. Did you lose any money? No. Because you were a disciplined trader. Because you were a disciplined trader. So a good lesson in this setup as well. Give me 1 second, bud. Let me just